Here's a question for you. Why in the world is gold being shipped from London to New York at a pace that even the fastest jets can't keep up with? I mean, I get that gold is shiny and all, but why all of a sudden is this precious metal the talk of the town again? Well, it's not just the shiny thing. Something huge is happening behind the scenes in the gold market, and it's stirring up some serious questions. We're talking about over 400 metric tons of gold, worth about $82 billion, being shipped from London to New York. And trust me, that's no coincidence. There's a lot more at play here than just traders being a little too excited about the shiny stuff. Now don't panic, it's not the end of the world, but there's a bigger picture unfolding that could affect gold prices, and even if you're just an occasional investor, this is important stuff. So grab a cup of coffee or maybe something stronger if you're really into gold, and let's break it down. First things first, why is gold suddenly making a move from London's vaults and heading across the ocean to the United States? The Bank of England has always been one of the most trusted places for gold storage. It's basically the Fort Knox of the UK. So, when gold starts flowing out of there in record amounts, you know something is off. And here's the kicker, the waiting times to withdraw gold from the Bank of England's vaults have jumped from a few days to as much as 8 weeks. That's nearly 2 months. Imagine needing to get some gold and then being told, oh sure, we'll get it to you. In 2 months. Yeah, that doesn't exactly inspire confidence, does it? But wait, it gets better. The driving force behind this crazy gold movement is the fear of tariffs. Yep, that's right, tariffs. Specifically, there's been a lot of chatter that the US government might slap tariffs on gold imports. Now, even though there's no official announcement, just the possibility has traders acting like it's the apocalypse. They're scrambling to get their hands on physical gold, and the result is that gold is being shipped out of London in droves. But there's more to it. If you dig a little deeper, you'll find something else playing a big role here, and that's arbitrage. You've probably heard the term arbitrage before, but let me break it down for you. Essentially, arbitrage is when traders take advantage of price differences between two markets. So, right now, gold prices in New York are higher than in London. And when you've got a price difference like that, you better believe traders will jump on it. In other words, if you're a trader and you can get gold for cheaper in London and sell it for more in New York, then of course you're going to do that. You know what they say, buy low, sell high. So that's exactly what's happening. They're shipping gold over to the US to take advantage of the price difference. Now I know what you're thinking, that's great, but how does this affect me? Good question. It means that there's a huge surge in physical demand for gold in New York, which is starting to mess with the market in London. And it's not just about the price difference. There's also the whole issue of tariffs hanging over the market. Now, about those tariffs. Why would anyone be worried about the US imposing tariffs on gold? It's not like gold is a regular product. Well, tariffs on precious metals could create a huge disruption in the supply chain. And when there's disruption, prices go up. Imagine it this way. You're running a business and suddenly the cost of getting raw materials, in this case gold, skyrockets because of new import taxes. What do? You pass those extra costs on to the consumer because that's what businesses do. And in this case, the consumer is you. If the cost to bring gold into the US goes up, you can bet that the price of gold will follow. But it doesn't end there. The real kicker is that now, traders in the US gold futures market are demanding physical delivery of gold. Normally, futures contracts are just rolled over or settled in cash. But now, they want the real thing in hand. Physical gold is in high demand and it's causing a supply squeeze in London. Here's where it starts to get tricky. London has been the global hub for gold leasing, meaning that banks borrow gold from central banks or other institutions and then lend it out to manufacturers, miners, and even short sellers. But when borrowing costs for gold go through the roof, banks and traders start to rethink their positions. You see, gold lease rates have been hovering at around 0.5% for years, but recently, they shot up to 12%, and that's not a small jump. 12% is massive, and it's making it way more expensive to borrow gold. As a result, banks are backing out of gold leases, which causes gold borrowing costs to spike. It's putting pressure on the entire market, leading to an even higher price of gold. This brings us to the big picture gold prices. Because of the supply squeeze, the price of gold has been rising. It recently shot up past $2,725 per ounce and is inching closer to the all-time high of $2,790 per ounce. Now you might be thinking, is this just a temporary spike or is gold going to keep going up? The truth is, it's hard to say. A lot depends on how the situation with tariffs, gold imports, and how the US economy plays out. But what we do know is that gold is in demand. The demand for physical gold, not just paper contracts, is pushing prices higher. Now let's talk about London for a second. As all this gold starts leaving the UK and heading to the US, London's free float, the gold available for trading in the London OTC market, is shrinking. To put it simply, there's less gold available for people to buy and sell. And as the free float drops, it makes it harder to find gold when you need it. This is a big deal. Why? Because London is supposed to be the center of the gold universe. If London's gold vaults can't keep up with demand, it could signal bigger problems down the line. In the last couple of months alone, a staggering 12.2 million troy ounces of gold were delivered to COMEX-approved warehouses in New York. This includes vaults operated by HSBC and JP Morgan, boosting reserves by 70% to 29.8 million ounces, the highest level since August 2022. But as the Bank of England tries to keep up with this, it's also facing logistical issues. The UK is struggling to manage the massive increase in demand for gold, and some are even questioning if London will remain the gold hub it once was. So what does all this mean for investors, traders, and regular people who just want to know what's going on with their gold investments? Here's the short version. Gold is in the middle of a massive global shift. More and more people are looking to buy physical gold as a hedge against inflation, currency devaluation, and even political instability. If you're thinking about investing in gold, now's a good time to think about allocated and segregated physical gold, the kind that's stored in a vault with your name on it. You don't want to be stuck with paper gold when the market is shifting this fast. To sum it up, no, you shouldn't panic about a gold shortage. But you should keep a close eye on this market. The supply and demand dynamics are changing, and gold prices are likely to continue rising due to the increasing demand for physical gold. And remember, gold is still gold. It's a safe haven in times of uncertainty, and it's not going anywhere. But how and where it's traded, that's where things get interesting. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.